Yo, what's going on, guys? It's your boy NTG back at again another video. In today's video, we're going to be doing the same thing on this scalping strategy that I use on gold, because I believe in reps. You guys have to keep seeing the same video in different scenarios every single time so you guys can get this to the point where it's like muscle memory for you guys, because I don't believe you guys can just watch one example of a video and then you get the strategy. So I want to show you guys multiple times, and plus I want to prove to you guys that this is actually a profitable strategy. I do this almost every week, so I'm gonna show you guys another example of that. And before we start the video, I just want to mention, guys, make sure you watch the whole video, okay, guys? A lot of you guys DM me on Instagram, and I can tell you guys are not watching the whole video, because you guys will message me like, hey, NTG, how do you get into your trades? Like, what do you mean, how do I get in my trades? I literally said how I get in my trades in the video. So make sure you guys watch the whole video, because you need the whole video to understand the strategy. I lay out a bunch of information throughout the whole video. If you're skipping 30 seconds, a minute, 2 minutes of the video, you're going to miss some things. You're going to miss probably a Fibonacci setting, an EMA setting, something I said, how I trail stop loss, how I get into a trade. You're going to miss something. So if you're actually serious about trading and wanting to learn how to trade, just sit down for 15 minutes. It's not that long. And watch the whole video, because you guys end up asking me questions that I answer in the video, and you actually end up losing trades because you're not watching the whole thing. All right, so I just wanted to mention that to you guys before we start the video. So if you're new to the channel, make sure you subscribe, like the video. You guys have been going crazy with the like button, and the channel has been growing like crazy, so I appreciate all you guys. So let's go ahead and get straight into the video. All right, guys, so here we are on gold, okay, on the 4-hour time frame. Now, before we start the actual trade that I took and the example I'm gonna show you, let's go ahead and review how lower lows, lower highs, and higher highs and higher lows work, because you guys still don't understand that a little bit. So let's go up to the top of the charts real quick. Now, I'm gonna show you guys an example of a downtrend market. Okay, so the market in the downtrend moves like this. Okay, let's go ahead and boom, perfect. All right, so the market moves in the downtrend, it creates lower lows. All right, so when you break down here, it creates a new lower low to this side here, and then when the market starts to retrace, okay, it creates a lower high. And the market does this all the time. So when we create that new lower high, what will the market do? It will create another lower low. And then once it creates another lower low, it'll create another lower high. And it's going to continue. And this is how we place our trades when we're re-entering. So we wait for the market to create a lower low, which creates a zone, a miniature zone of support, right? And what we're doing is we're waiting for the market to break that zone. So once we break that zone, that's when we want to enter into our trade. And then we create another lower low. And when we create a lower low, what does the market do? It creates a lower high. And you guys see here at the support, this is where the market tends to go back to, because it creates some sort of resistance. And this is also why a key note, and see, this is why you can't skip the video. This is a key note. You do not want to over leverage your account on your trade. So this is your first trade here on the break. For this second trade, you do not want to add in a position that's higher than this. So if this is a 0.20, this one shouldn't be no more than a 0.20, 0.10 at the most. You do not want to put a 0.50 and then all the market has to do is retrace up to here, and then you blow your account. You have to do this carefully, guys. All right, so don't don't automatically assume once we get that break, enter the trade so aggressively, because that's where some of you guys are going wrong with this. Okay, so you guys get the point here on the lower low, and then the lower high, the break, and we re-enter, and then the same thing here. We create the zone of support. Once the market breaks it, there's another entry, and then we're doing that, and then of course we're trailing stop loss with our EMA, which I'm going to be showing you guys soon. All right, so we'll get to that. So now let's go ahead and do the uptrend. Okay, so we're in uptrend here. Boom, creating higher highs and higher lows. Okay, so that's good enough right there. All right, so the market is in an uptrend. So from here, we create a new higher high. And then we create a higher low. Okay, guys, so we create a higher high, and then we come back into this higher low. All right, so once we create that new higher low, what do we create? A higher high. And then with the higher high comes, let me delete that, a higher low. And that's how we continue to watch the market. And then of course we create this resistance. All right, create this resistance, and then we create a higher low. We break this higher high, creating a new higher high. So this is where we're entering the trade, and we are creating a new higher high. Once we create that new higher high, what's the market going to do? It's going to come back to retest this zone of resistance and turn into support. So it's almost like pretty much like a fib retracement. You guys see here? Ooh, perfectly right at the 50% retracement. That's what it is, and that's how the market moves. And this is why it's easy to build a small account doing this way, because you're just adding positions into the trend as the market is just going up, going all the way up, or going down, and we're just catching all of those pips, adding positions, adding positions, adding positions. Okay, so I just wanted to break that down to you guys so you guys can understand higher highs, higher lows, and lower highs. Okay, so go ahead and keep practicing that. And I also recommend, like I said before, guys, this pivot point high low indicator. Okay, this indicator automatically identifies lower lows and lower highs and higher lows for you if you struggle with identifying it by the naked eye. Okay, guys. All right, so let's go ahead and get into the trade. All right, so the first step that you guys want to do is you always look for a 4-hour market structure. I'm not going to say this again. 4-hour market structure. I don't know why you guys are on the 15-minute. I don't know why you guys are looking at it on the 30-minute, on the hour. We're not going to the lower time frames yet. You have to start off at the higher time frames first. All right, so we're on the 4-hour, and right now gold is consolidating right here. So we're in the zone of consolidation. So the only time you should be looking for a trade is either we break to the upside or we break to the downside. Okay, so in this case, gold dropped to the downside. So at this point, once you draw out this zone, this is where you're going to be looking for some sells. Okay, so now we can go down to the lower time frames, because now we know the overall direction of the market. So the second question you should ask yourself, are we in session? Yes, we are in session. So you guys could have caught the break here. All right, I wouldn't have took this trade personally, because we are already more than halfway through the London, and then we started the New York session. That's usually when I finish trading. So, well, you could have took that trade. All right, and it would have dropped for you a little bit before the session closed. But let's go ahead and go into the trade that I actually took. So I went to the 5-minute. You guys know I like the 5-minute, and then I like to go down to the 1-minute. So this rising flag pattern, right? This is a bearish pattern. Okay, I had this pattern drawn out before the London session started. It was like an hour before it was around like 1:30 a.m. It was an hour and a half before the London session started. So I was thinking that the market was going to keep going up, and then once the London session hit, it was going to drop. So that was my initial plan. But the market had dropped like an hour before the London session. Now, if you have a pattern and it's like an hour before the session starts, you can take the trade. You don't have to wait exactly until the session opens up, because sometimes the market moves like 30 minutes, an hour before the session starts. So if it's close to that session start time, you can take the trade. I just don't want you guys entering trades in the middle, like the New York session just ended and then now you're starting to place trades. You want to be close, very, very close to the session or in the session. All right, guys. So I drew this rising flag pattern up before I was going to go to bed. And then I set an alarm around here, so I knew the market to wake me up, because this does offer alarms on TradingView. I set up the alarm so it can wake me up when the market broke this pattern. So what I did was, I was lazy. I'm not gonna lie. I was really tired. I was training all day. So all I did was just you see the guys, these positions. I'll have a screenshot over here too. All I did was just put a bunch of sell stops. I didn't even like trade this, to be honest. I put sell stops because I've been doing this for so long. Like, I already know the direction of the market. I put a bunch of sell stops and I just knew gold was going to drop. And that's how I traded it. And I just went to sleep. But unfortunately, the market woke me up. So I didn't even get like 45 minutes to sleep. So we had this pattern here and the market dropped. Okay. So now I'm going to go to my wait first. Before we do that, let me show you guys how I take my targets. So I draw my fibs to the lower low and then to the recent higher low here. Boom. Okay. So my targets is at the 127. All right. There's two ways where I take targets. It's if you guys watched my last video, I take my targets from the negative 100%. And then this is the second way that I take targets, depending on what the market is telling me and how I want to take targets. You can decide on which way you want to take your targets. Just make sure you watch both videos and see which one you like better. All right. And this is my my Fibonacci setting. I know you guys wanted to see my settings from that last video. I forgot to put it up there, but this is it right here. So I drew this from the lower low and then from the recent lower high. And this is where I get targets. Once the market reaches to my target zone, this is where I'm going to start trailing stop loss with my 30 EMA. All right. So I'm going to show you that. So once we got that break, we broke this pattern here. This is where you could have entered. So this would have been your first entry right here. Boom. And then you would have switched to the 1 minute time frame so you can start watching the market. And now this is all my sell stops here. All right. But just ignore these. I'm just having them here just to show you guys how my trade played out. But now I'm going to show you guys how you should do your own trade. Okay. So the market is dropping very well here. I'm just waiting for the market to create a new. All right. So right here. Boom. So we created a lower low. So once we break this zone here, this is where, let me get rid of these so you guys don't get confused. You guys already see my positions on the screenshot. So once we break this zone here, this is where we're going to add another position. Oh, we were close. Boom. Perfect. So now we broke the zone here. All right. So now that we hit targets, all right, we hit targets in the zone. Now we can trail stop loss on our 30 EMA. So what you want to do is you want to trail it right at the end of the EMA. And that's how we trail stop loss. So every time the EMA moves down, you push it down. And then you're just going to keep, and then we're just starting to start the session now. Okay. So boom, the market keeps dropping. All right. And then we're just trailing stop loss. If you wanted to add another position here too of this break, you could have as well. All right. This indicator is not perfect on identifying lower lows and lower highs, obviously, because there's no way you can get a lower low, two lower lows like this, but it still works pretty well. So, but I do recommend you guys to learn how to see it with the naked eye. All right. So now we're in session and we're just trailing the stop loss. You guys see how this works? The 30 EMA, we're just trailing the stop loss and we're still trailing it. We're just going all the way down. That's all we're doing right here. Very simple. We're not even looking at the market. We're just trailing stop loss right off the EMA. Beautiful. Just gonna keep lowering it until we get stopped out. So every boom. Okay. So we got stopped out right there. Okay. So how this trade would have worked out, let's go ahead and see here. All right. So about 83 pips. Beautiful. That's a lot of pips. Beautiful, beautiful, beautiful. And that's simple. That's how you guys want to do it. 4-hour time frame. You want to look for where you are in the market. Once you break that 4-hour, that break, you have to break on the 4-hour, the market structure. Then you can go to your lower time frames, whichever time frame you like to trade, and then just look up for a pattern. Just look for a pattern, wait for that break of the pattern while you're in session, and then take the trade. And that's pretty much how you want to do it. I mean, this is how I flip accounts all the time. Okay. Now, you're not going to obviously you're not going to flip the account from 100 to 1,000 every single time. You guys have these expectations of flipping the account every single time. No, it doesn't happen that way. It doesn't happen that way often. Like today, like that trade I took just now, I only made what, like $500. That's still a lot, but just don't get this high expectation that you're going to do a crazy flip every single time you do these trades. Okay. I don't want you guys to start thinking that way. I want you guys to really understand money management and trading psychology. So get into the money management side first. Learn how to trade, get more experience, and risk minimum 2% of your account. And then when you're good in Forex and you're making profit and you can have a little fun with it, then you can start, flipping accounts and stuff like how I do it. But if you're a new trader, please take it slow. Enjoy the process and the learning process of the Forex market, because there's a lot of things you still have to learn before you start risking your whole account. All right, guys. So that's pretty much all I have for today for this video. I hope this video was very helpful for new subscribers and my OG subscribers. So if you like the video, make sure you give it a thumbs up. Make sure you don't forget to subscribe if you're new to the channel. I appreciate all you guys showing me some love. You guys were shooting me DMs like crazy. I was not expecting that. I had like 50+ messages in my DMs. All right. So don't worry about it. You guys can keep blowing up the DMs. All right. I'm going to see you guys in the next video. Peace.